Today I'm going over how this strategy got a Sharpe ratio of 1.21, which is a godlike Sharpe ratio, and a Sortino ratio of 11.01 in out-of-sample data. And look at this max drawdown, 9%. Incredible. And this is an out-of-sample data as well. Phenomenal. And so what this actually did was Claude worked on the strategy overnight for me, built me a series of different strategies, and then ranked the top 5 of them. There was about 25 that it was testing overnight. And if you're new to the channel here, I'm using Claude to run a training engine overnight. So I hand off my actual Python training engine to Claude, and then it handles it for me overnight. And I have previous videos where I show you guys how to build that yourself free, so you can have your own system locally to do the exact same thing. And we already have users in the community in the Trade Tactics Discord who are doing the exact same thing. So this movement, this trading bot movement has, taken the retail trading space by storm. There are a lot of really big firms that have trading bots, but now retail is coming for you guys with actual really good trading bots. So the free Discord, if you want to take a look at the progress and contribute, the link to that Discord is down in the description. It's free. And also, if you guys feel like it, give the video a like and subscribe to the channel and hit the bell notification icon if you find value from the channel. All right, so what exactly is this strategy? This is a fractal decay strategy. And the way that it works is it scans for price structures of varying depth levels and then specifies a sigma weighted decay filter to confirm the move is real before entering. And so that's how it achieved this result. So the decay period filters out old price structures and only looks at the current period, which is incredible. This was Claude Opus running on my machine overnight and testing different strategy rules, price strategy entries and exits, and then just created this one. This is a very, very clear winner. I'm going to go through the other 4 as well. So we're going to start after this. I'll just summarize this one. We'll go more in depth later on to the video, but I just want to show you how it got here because it built off of other ones. So I want to show you how Claude went through that so that you guys can replicate that for yourself. So here is the 5th place strategy, and I have, a couple more that I want to get through, but this one, it looks a little bit promising, right? We have a win rate of 53%, Sharpe ratio of 0.66, and the Sortino is fairly good. This is the swing struct, so it tracks how the sequence of swing highs and swing lows, so it's another one that tries to classify market structure, which is very hard to do properly. So higher highs and higher lows, indicate an uptrend, so it identifies that and tries to match that where it's trading. I also have a couple other graphs here. So we did one, rolling average period. This is a little bit more out of sample data. The win rate stays confident around 53%, and it has a pretty good total trades ratio. So we know that we're not too bad here. And if I scroll down here, it did have a 44% max drawdown. So the testing periods, that was not as good. And then the last one I have full out of sample, which the last one I showed you, the best one was 10% drawdown or 9% drawdown. This one, not good. So when we show this strategy completely unseen data, it collapses, which is why we do those validation steps. So that's why this one completely gets thrown in the gutter. So we can move on from this one here. Next up, we have the Calman strategy. Calman is an adaptive smoother from aerospace engineering, and it estimates the true price by dynamically balancing new data by its existing estimate. So this was the third one. This came third overnight, and this was out of over 25 that it ran on my system while I was sleeping. So I kind of gave some guidelines to what Claude Opus could do overnight, and I just wanted it to compete. I wanted it to rank its previous best strategy and then try to beat those benchmarks. So the benchmarks it had to beat were here's the in-sample data. You're looking at the out-of-sample here with the low drawdown. Here it is. So I've relaunched it. Just wanted to get the accurate Calman. So here are the parameters that it found. This was the winning formula, performed the best in the training data. And we have some testing data. So this is the first out of sample data, and I have multiple out of sample pieces of data that I will show it. So this is the out of sample data that Claude can see, and it wants, so here's a general structure. This is how I got it locked down to make sure that it's robust. So I have in sample data. This is the data that my engine sees, this first chart here, and these are the candlesticks from 2020 all the way to 2023 in February. So that's the Claude and my engine can see this, and then the engine can't see this data. This is the out of sample data, and it's not selecting, these parameters, this parameter set based off this, so it's going in blind. But my Claude can see this data, so Claude can rank this and say, okay, we have a win rate of 49%. The Sharpe ratio is 0.3. Sortino ratio is 0.75. What do we think about this? And this was, out of all 25 strategies, this one came in around third. And then there's one last out of sample data points, and these are for all of the strategies that I've built, by the way, just the whole process for how I ensure that it's building strategies that are robust. I have true out of sample data, and this is data that neither my engine or Claude can see, which means that if, Claude approved this strategy, I go in and I verify, okay, well, you approved the other numbers from these two other charts, but this last chart here is where I'm verifying. And the Sharpe ratio continued to come down, which it is expected in out of sample that you're going to have some distortion between, the win rate before was over 50%. Now we're below 50%. So it's gotten slightly worse. There was some decay there, which is fine. But this 47% drawdown is not fine. That is too high, especially when, there's this strategy here. It doesn't look like it's a clear up all the way through. And yeah, there's just not enough consistent results. Plus buy and hold was, 700% in that period. So I'm comparing to that, 27%, not good. So moving on. And here is the next one. This one looked very promising. 14% drawdown in the training data. This is the first one that both Claude and my trading engine can see. So it wants to make these numbers, it wants to make this drawdown number the lowest, and it wants to make this Sharpe ratio the highest. Those are the two variables that I'm optimizing for. I'm not optimizing for net profit. So if the engine sees a higher net profit, it doesn't necessarily select for that. So let's say candle momentum. The way that this strategy works is it looks for candles like 3 green candles in a row, or like a bullish pattern or a bearish pattern, and it enters in that direction once we have confirmation. So this strategy was a little bit better. Win rate 47%, which is manageable as long as the risk ratio is high enough, and that's a pretty good net profit. Now, the next thing we need to see, this is the one that the engine and Claude were looking to optimize the drawdown, trying to get this number low. Now, the one that the engine can't see but Claude can is the second one. So this is the second data set. So 2020 to 2023, and now we come to the 2024 data all the way to 2025 in March. So net profit is 127. The win rate came down, and the Sharpe ratio and Sortino came down a little bit as well. What does that mean? Well, it means that out of sample, it's starting to have a little bit of trouble. But the last test is the one where I actually determine it. So let's look at the metrics here in the out of sample, or the testing sample, and the win rate, 40%, and max drawdown came up 53%. So you can see there's a period of drawdown here. That's what that's looking at. The engine, and so the engine is not liking this period specifically here. And if we unpacked why, we could probably go in and see if we could add anything to this to supplement the rules to kind of figure out how it was weak in that area. It looks pretty strong everywhere else, just in this one period, a little bit weak. But it's worth doing that or not depends on the final chart, the sample out of the final test, which this is 2025 data from March all the way to the present moment. And it's profitable. It's 268%. It's just that there's 56% drawdown, right? This period here, once we started out, did not do so well. So it was coming down, having a really rough time until here. And then one big trade, it is kind of a red flag. Most of this net profit is coming from this trade, which could have just been a fluke. We want consistency. We want to have, a big enough sample size and, consistent enough win rate, as well as Sharpe ratio should be higher. So in here, it's hard to say, look, this is the drawdown graph here. you can kind of see this net profit visualized here. This is the drawdown graph. Really high drawdown here, came down there 50 or 56 minutes. So that is the strategy is a little bit stubborn, So let's go to our last strategy here, and we'll do the exact same process. So the Q sum strategy, this is a statistical method that it accumulates deviations of returns by their name, and then when the sum exceeds a threshold, it signals a regime change. So the market shifted from noise to a trend. So that's when it will actually enter. So inherently to this, there is a little bit of a flat filter, and so it manufactures its own kind of quality control as well as its own directional. So this is what Claude Opus found: 51% drawdown right away in this, right? So this was the last place for our trades. So I'll just quickly go through this one. This one was not, so this will be quick. But yeah, Sharpe ratio in a training data. Let's see here. Was that the out of sample? Yeah, sorry about that. I showed the out of sample first, but yeah, this is the Q sum strategy. So 24%. Yeah, and this graph looks pretty good, right? 51% win rate. Now, if you were just trading on TradingView and you saw a graph like this, you open up your TradingView or whichever trading program that you use, and you have a chart that looks this good, you might think it's tradable. You might actually consider putting real money on the line here. But let's go to the first out of sample. Now this is the one. Again, this data, see how it gets slightly more choppy. There's still an uptrend. Let's go back. Look how smooth that first trending curve was. Really smooth, right? And as soon as the engine stops looking, and then it just validates that these same parameters on future data without adjusting these or anything else, so hands off, the engine just keeps everything constant and then introduces new data, things get a little bit more choppy. Watch this, and chop just appears. So that's not good. And I think this is around 60% drawdown. I could scroll down and see that. Yeah, 59% max drawdown. Not what you want to see. So right away, this is ruled out, right? It looked good from the training data, and of course, I already showed you guys the out of sample data, and this is where Claude Opus and my engine, Claude Opus, just proves it and doesn't even look at this data set. Only I look at this data set final conf to remove bias completely, so that the AI can introduce bias. To be clear, the AI will select things that look good in the training data, and if you show Claude all your data, Claude will be with a bias, which you want to remove. So yeah, this completely garbage. Once you see this engine run, or this specifically Q sum strategy run on out of sample data, it's garbage, right? So let's go to our God tier strategy. This is the one that we got, and this is our winner of the day. I'm going to show you first. This is actually out of sample. So this is the one that Claude did not look at and the engine could not look at. That's how I know that this is a clear winner with this strategy. Fractal depth 5, decay period 24. It picked these parameters on the training data. So let's go look at the training data. And to be clear, there's also bootstrapping. We randomize the candlesticks to make sure that for all of these here, that it'll hold up if we jumble up the candlesticks, to make sure that there's no patterns that we're curve fitting for or anything like that. And 28% drawdown on just the main data set, which is, again, you wouldn't think that would be good. And of course, from here, this is just the beginning entry of the strategy. You can add, regime filters and to try to filter out bad trades from here to get that better and more optimized. And then from here, assuming we accept this strategy, let's go through to the testing data. This is the data that Claude Opus could see, but our trading engine just put forward the parameters. And there you have it. Look at that nice, really nice graph. That's how it should look. And the drawdown was around 24% in the out of sample testing data. And all of the strategies run on the same coin. This is Solana 1 hour chart. And so why does it look so good on this final graph? It looks amazing. 9% drawdown, Sharpe ratio of 1.21. That is a godly Sharpe ratio. And we know that this isn't curve fitted because we've done our robustness checks out of sample, walk forward. We've done bootstrapping on it. We've done all of the rigorous tests, and then we get a Sortino of 11. So that's really good. Now, we're not done, right? This is promising, but it's not if you're really serious about trusting your bot with a live account. You would want this algorithm. I would ask my Claude, okay, tune this on different time periods. This is the Solana 1 hour chart. Can it perform on the 30-minute chart? Can it perform on different coin pairs? That's important too. Other coin pairs, making sure that your engine is flexible, that your strategy has an edge. Maybe it is just good on this one coin, Solana, and this strategy only works on Solana. But the chances go up that it has general robustness. That's a key word. General robustness means that it can apply more broadly, not just to one coin. Or let's say that you have a strategy that only works on gold, or only works on NQ Future, or only works on a certain forex or in a certain time period. Well, that means that it's going to alpha decay quicker, meaning that your strategy will be obsolete fast. If your strategy is more robust, then it will last longer. You can put it on different assets and it'll work for a longer period. Now, a strategy is they won't last forever, but one of the things that is important, one of the things that I hear a lot is that, trading bots, you just don't have a chance. It's hopeless because the market's already rigged, or there's already so many algorithms in it and clustered. Well, guess what? If you make a better algorithm, your algorithm can overshadow other algorithms. So that's what we're doing. We're looking at real price data all the way up until the current day, 2026, when I'm filming this video, and we are still having these really good results. So this is promising. Now we could take this, we can add more regime filters, we could add proper take profits, right? Dynamic, customized profits. And I can ask my Claude to do that tonight. I'll be doing that later this week for sure. And so follow along and subscribe if you want to see updates how I build this, if I ever release a strategy. But this is the process. This is how I'm just showing you guys transparently how I operate. And this is how it's done. So from here, yeah, right now it's in Python. I can add to it. And then if I really like it, I can take it, customize it. I could trade with it directly in Python, or convert it to MT5 or into PineScript, so I can trade it on TradingView, for example. But what I probably will do, if this is good, if it pans out in real world trading, is you guys know I have the marketplace, SignalSwap marketplace, that I was a developer for, and we have an amazing marketplace that uses real world forward tested data, as well as it uses stress tests. So this, if this works, then you'll see it on this one on the SignalSwap marketplace. So I'll put it up there. And if you guys want to list anything on the SignalSwap marketplace, if you have a good bot, or if you want to find a good bot, then sign up for SignalSwap. It's free to join, free to use, and you can list on the SignalSwap marketplace, and you could price it the way that you want and get 70% of the revenue from it, the vast majority of the revenue from the bot that you create. So going back to this other strategy here, the one, as soon as you see the auto-sample data looking really bad, that's how you know that it's curve fitted. This strategy was curve fitted to the original data. Going back here to the original training data, looks promising, right? Really good, but it's curve fitted. And this is a tool that you should use. Everyone has to use this, whether you're trying to tune your strategy in TradingView or not. You have to test if it's fitted. Otherwise, you're going to lose money, and nobody teaches you this. So thank you for following along on this video. And if you're looking for good strategy ideas, you can always join, the free Discord. There's tons of strategies come out, and you can test them for yourself for robustness. There's this one here, 70 to 80% win rate on many crypto pairs, and you can test if you get a breakthrough on them, and make sure that you think the creators of them, they're open source. And so I just wanted to thank you for watching this far in the video, for liking, subscribing, and if you have any questions and you made it this far, then comment down below any questions you have, and I'll do my best to answer all of them. I'll see you in the next